JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 4th of December 2020. So yep, welcome everyone. Welcome to this Friday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos. And of course, our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top, guys. So now we do have quite a busy day in front of us. So of course, according to the economic calendar, we do have a bunch of data, guys. I mean, just from a few of that data, of course, the most important is the US NFP number, employment figures, yes, and the same story with Canada. Canada will also deliver its employment numbers, so we'll see how that's going to play out. For now, the NFPs are expected to come out a little bit on the lower side. So again, let's see how that's going to play out. Some data from Europe. We do have, I think, yes, we do have the UK's construction PMI. So yep, also will be interesting to see, and Germany's PMI as well. So yeah, it'll be interesting to see how those figures show up. But for now, basically, yes, keep your eyes on the NFPs today, employment numbers from US and Canada. So yep, let's see how that's going to play out. But jumping into the technical analysis here on our charts, we can see that the Nikkei ended up ended up this week still below this hurdle, below this 26,834 territory, and that's the high of the 30th of November. That's the highest point of November. Although we did get a few overshoots here, still the price remains below it. So of course, don't get me wrong, I mean, it could look still quite bullish, even though we broke this upside support line, which by the way was a bit tentative. We can remove that. Now, I mean, we can see that it's kind of trading for the past 4 days. The index was trading in a bit of a consolidative manner, now we still kind of need that confirmation break in a daily close above this 26,834 territory, the highest point of November, in order to aim for some higher levels. But for now, basically, yep, the week is finished for this one. So let's see how next week is going to start. But of course, the more important thing is also to keep an eye on today's European and US equities. So that might kind of give us a good signal here for Nikkei on Monday. But for now, it is how it is. I'm going to take a bit of a cautious approach, probably cautiously bullish even, I would say, because in order to consider the downside, well, I mean, at least a move below the 26,400 zone, somewhere around here, would be needed. But at the moment, it's not really happening. So it's closer to this barrier, closer to this key resistance area. So I'll keep an eye on that one. Also, before I actually continue, guys, just a quick mentioning that later on we're not going to have any traders tea time today. So it's only this session. So yep, I hope you will find it useful. We'll resume with all the traders espressos and tea times on Monday. But coming back to the charts here, Shanghai Composite also struggled with this barrier, or should I say continued to struggle with this 3,457 territory, which is the upper bound of the range where the index is currently trading at. However, of course, on one hand, it's showing kind of weakness. It's showing that the index continues to struggle with this barrier. However, it's struggling with this barrier, but it's still very close to it. So in the past kind of 3 days here, I mean, you can see that although we kind of the index moved a little bit lower, still it remained very close. It's kind of you can see that this barrier is kind of a magnet here. And another thing here on the positive side, of course, is a potential bullish flag here that we're forming. So we have a nice poll here, the Tuesday's poll, and the Wednesdays, Thursdays, and today's candles here are kind of showing, kind of forming a possible flag here, and in a way, this whole pattern looks like I said, like a bullish flag. However, the objective remains the same. We need that confirmation break in a daily close above this 3,457 territory before considering higher levels, guys. So that's why be very, very careful on this one. In terms of the downside, well, previously I talked about this 3,368 territory, but given that we have shifted a little bit more to the upside here, and the 21-day EMA has shifted a little bit more to the upside now, in a way it could come closer to this level now, the 3,387 territory, which well, could be that breakout point for the downside, guys. But for now, let's be very careful here. Let's keep an eye on it, and yeah, let's see how this is gonna play out. But for now, I'm leaning a little bit more towards the upside. However, I would need that confirmation break first, a daily close above this 3,457 level first, before getting comfortable with the upside. Now, the German DAX, well, the German DAX, not the DXY. DXY is going to be next one, but yeah. You can see that, yes, continues to drift lower as expected. Yesterday it remained in the negative territory, slightly, not much, but stayed above this 13,214 zone. Now, I talked about this one previously, that in a way this area could provide support, but even if it doesn't, if it breaks below this, still the last chance here for the bulls to step in could be near this upside line taken from the low of the 13th of November. And if I look at the cash index, where it's currently sitting at, the price is sitting at around 13,225 zone, so roughly around here still. Basically, we are still sitting above this 13,214 zone. So again, let's see how this is going to play out. Like I said, even if it drifts lower here, still there is an opportunity for the bulls to step in somewhere near this upside line, and maybe then, yep, we can see a nice rebound and a push higher. For now, that's the idea, but if this gets broken and we see the price falling also below the 21-day EMA, or even better, below the 13,000 territory, now that's where it could change a little bit, and we could see the bulls getting spooked, and yep, we could see more bears joining in. So be very careful on that one. Quick update on DXY. To be honest, I'm not going to spend too much time on this one. Everything is working out nicely here. We did have a move that initially this week I was talking about, that if we get a drop below the 91.75 territory, yes, my next target is going to be this 90.93 territory. But then we've reached that level, and my next target was the 90.59 level, which, as you can see, continues to provide decent support. So we got a test of that area, and now this area is providing decent support. Now the big question here is, can we actually see a bit of a correction here to the upside? Well, for now, to be honest, because the trend is still to the to the downside, it's going to be a little bit tricky here. And to be honest, I need to now scroll back here again into history and try to find a potential good area of support. Now, one of those levels could be right here, if I manage to capture this one finally. Okay. Now I need to zoom in here a little bit. So now, okay, bear with me, guys. So this is the one that I'm talking about. That's the lowest point of April of 2018, and that's roughly around the 89.23 territory, so roughly around there. Of course, we do have this little obstacle here, this inside swing high of the 12th of April, which is around the 89.96 territory, or in a way, if you want, you can round up towards that psychological 90 zone. So in a way, actually, that's what we're going to be probably aiming for right now. So given that we're not far from that psychological 90 zone, well, I mean, that's the area that we could see getting tested quite soon. And to be honest, if it made its way all the way here, then why not to try and test the psychological 90 zone? So again, of course, that's just a theory, but just an idea. But yeah, we've seen that happening several times. So for now, guys, we'll be very careful. And also, if let's say for some reason this 90.59 territory continues to provide support, yes, we might see a bit of a rebound here, we might see a push higher. However, don't forget that we're still below this downside line taken from the high of the 4th of November, which could provide resistance, and another slide here could be possible, maybe even then going towards that psychological 90 zone. However, for now, probably my main scenario will be a break straight away here, but of course, let's see how this is going to play out. If we, like I said, we drop below this 90.59 territory, my next target is that psychological 90 territory. Gold, so working out perfectly, and I'll explain why. Because basically this week what I said to you guys that of course, first of all, keep your eyes on this downside line. This move happened on Tuesday, and then what I was saying that if we get a break above this downside line, and then we see the daily candle remaining above this 1818 territory, yes, I'll aim for some higher levels, but only up until the 21-day EMA or this 1849 zone. As you can see, the 21-day EMA is acting as a perfect area of resistance so far. Now, the big question here is, can we actually move further north? Of course, it's probably $1 million question right now here, but for now, I'm gonna be very careful. I'm gonna take a bit of a neutral stand, to be honest, and to be honest, I'll just kind of stay safe and I'll just observe, because here, if we do see a strong push above this 1849 level, yes, great news for the for more buyers, but because it's Friday, guys, it will be quite interesting to see if, let's say, if we do get a push above this 1849 level today, will the daily candle remain above this area? If it does, then yes, perfect kind of scenario here for the bulls going into next week. But if it stays below this area, let's say if it breaks above it but stays eventually below it, then, well, I mean, maybe not, or everything is okay in the bull block, and we could see this one reversing back down. So keep your eyes on that one. A quick update on Brent oil. I talked about this one, and this week I've basically, it's what I was saying, that keep your eyes on the highest point of August. As you can see, we had a nice reversal from there. So initially I was saying that we could see a move lower. We broke this kind of steep upside support line, which was a bit of a tentative one, and what I was saying, that after we broke it, it's not the end for the bulls, because if this area here, the highest point of somewhere around this highest point of August, if this area continues to provide support, then we might see a nice rebound and a push higher. Exactly what happened here. And most importantly, we've managed to overcome the highest point of November, guys. Now the big question here is, can the daily candle today stay above this area, above this 49.06? If it can, well, wonderful. It opens up the path towards that psychological 50 territory, or even better, this 53.86 level marked by the highest point of March of this year, of course. Now, so keep your eyes on this one, keep your eyes on this barrier, the highest point of November, and let's see how this is going to play out. But for now, everything's leaning a little bit more towards the upside. Bitcoin Cash. Now, this one, I haven't looked at this one for quite a while. Let me just clear up the chart. Basically, as it's as its friend, the Bitcoin. Bitcoin Cash is not really performing that well, I would say. Although you can see that yes, the crypto is a little bit coiling up here. So for now, I'm going to be very careful here, and I'm going to be very cautious, and yep, I'm going to keep an eye on this potential kind of this, not potential, but this triangle. And basically, like I said, the price is coiling up right now. The crypto is coiling up. However, on the positive side, the crypto remains still above this 21-day EMA. As you can see here, it continues to provide very good support, guys. So if you want to aim for some higher levels, yes, wait for a break. Still wait for a break of this downside line here, the upper side of the triangle. But also what you could do here is keep an eye on this little level right here, the 297.70, approximately around there. A nice good pop above it may open the door back to the high of the 30th of November near the 322 zone, or even above that. But like I said, we need that confirmation break here first above this downside line. Now, in case of the downside, well, I'm going to take a bit of a very conservative approach here. Not only that I would need to see a break of this this upside line or the lower side of the triangle, maybe also I would prefer to wait for a drop somewhere below here, the 255 territory, because at the same time the price would be placed below all of its EMAs then on this daily chart. So again, and then we could get a little bit more comfortable with the downside. AUDJPY, so jumping into a few pairs, quick update on this one. I'm not going to spend too much time on this one because I talked a lot about this pair this week. Basically, we managed to push above this this barrier, the 77.10 zone. Yesterday we managed to climb further north, but then it kind of corrected back down, and today we're testing this 77.10 zone from above. That's still a positive. Another positive is the fact that we're still trading above this upside line taken from the low on the 2nd of November. But if it fails, if all this starts failing and we see the rate falling below the 76.50 zone right here, at the same time, the rate could be placed below the 21-day EMA and lower levels could be met, guys. More sellers could be joining in here, but at the moment, the bulls are still hanging in there. So let's see if we get a nice rebound from this upside line. It might not even happen today. Maybe it's gonna stay like this for today and then kind of do the whole thing next week. But again, of course, we never know. Let's see how the NFPs and the Canadian employment figures kind of, if they have any huge implication on this pair. But of course, for now, it is how it is. The technical picture is still somewhat bullish. But we need to get a nice rebound from this area first in order to start aiming for some higher levels again. USD/CHF, also something to keep in mind today because of the US date, of course. But from the technical side, you can see that yes, the pair drifted below this 0.8983 territory. I talked about this area. That's the lowest point of November, and it continues to drift lower. For now, if we basically, I need to kind of go scroll back here a little bit more into history to find that good potential area of support, and the next one could be here near the 0.8837 territory. I talked about this level yesterday, guys. That's the kind of the high of the 15th of Yep, need to zoom in here a little bit here. That's the high of the 20th of January, guys, of 2015. So that's where we are, or should I say that's where we're getting closer to. So yep, let's see how this is going to play out. For now, we're leaning a little bit more to the downside, guys, even though we already had a good move lower. But to be honest, we've seen this happening. For now, it's one-way traffic here. So yeah, let's see how today's data is going to play out. But if you want to be a little bit more on the safe side, probably wait for the news and then react to the news. GBP USD. So this one is pushing higher, of course, the weaker dollar. Yep, we're now close again to this highlighted area. I talked about this one and yesterday, and this is a key resistance zone roughly between the 1.3483 and the 1.3515 levels. Yesterday we saw a push above this highest point of September near the 1.3483. But you can see the kind of the bears kind of quickly pushed this pair back down here. So in a way, there is a possibility to see another pop here. For now, I'm going to continue targeting the upside, but I want to be very careful near this highest point of December of 2019, near the 1.3515 zone, because if by any chance it provides good resistance, well, I mean, we could see maybe a bit of a correction here to the downside. So keep your eyes on that one. Quick update on GBP JPY, also quite positive. Of course, this area here, this whole area, resistance area, is providing decent, well, a decent hold up. Of course, we can take that it's roughly around that 140 zone, the psychological 140 zone, but basically it's more of an area here, because you can see that this 139.85 and the 140.31 zones, the levels are kind of the ones to watch right now. So basically, in other words, you can keep an eye on this 140.31 zone if you're a little bit more on the cautious side, and then if you get a nice break above it, a strong push above it, and we get a nice daily candle staying above it as well, then yes, my next target is the highest point of September, and that's roughly around the 142.72 zone. Quick update on euro against the Turkish lira, one of my favorite pairs, to be honest, and for now it's all very technical. These kind of exotic pairs, I would say, do present themselves with nice opportunities sometimes, because they're quite technical, and to be honest, they're sometimes quite predictable. But again, unless something major comes out in the in that developing country economy, no, well, emerging, I would say, actually more emerging economy, like Turkey, for example. Yep, if something comes up from the political side or the central bank, then yes, I mean, we could see huge fluctuations on such pairs. But the moment when everything's like quite stable, this one's very, very technical. So for now, you can see that in a way the pair is kind of consolidating. It's currently sitting in a little range here between the 9.2558 and the 9.55 levels. It's closer to the upper bound, and yeah, I mean, for now it's I'm leaning a little bit more towards the upside, but I would like to see that confirmation break here above this barrier, or I would like to see the daily candle remaining above this 9.55 territory in order before kind of aiming higher. A quick update on Euro GBP. Good move here. I talked about this one in the beginning of this week, if you remember. Basically, the pair have managed to break this downside line and stay above this 0.90 zone. So good news for the buyers. Yesterday we saw a correction, but you can see that it wasn't the bears were not able to drive this one all the way back below this downside line. And yep, today we're seeing a bit of a rebound here. So for now, I'm going to remain a little bit more on the positive side, unless it starts dropping back below the 0.90 zone. If it does that, I'm going to take a bit of a neutral stand here again and continue observing the price action for now. Yep, like I said, I'm leaning a little bit more to the upside. Euro JPY, quick update as well. We got a hold up this week. In the beginning of this week, I said that my next target is the 126.46 level, and then I'll take it from there. And exactly that. So we managed to hit that area, and yesterday we corrected a little bit lower. Now we're seeing another possible attempt kind of to move higher. However, on this one, I'm going to be a little bit more probably skeptical or cautious. I'm going to take a bit of a careful approach and probably wait for a push, a stronger push above this 126.46 level in order to aim for some higher levels. Until then, I'm just observing this one right now. Yes, we had a good run, but let's be a little bit careful, guys. Again, today we do have some data, although it's the US and Canadian data, but yep, Japanese yen could react to that as well. EURUSD, finally, this one is getting a hold up near this 1.2155 territory. Wonderful, kind of the whole wonderful move from the beginning of this week. I talked about this, yeah, guys, and what I was saying, that if we get a pop above this 1.2011 territory, then my next target is the 1.2055. But if that gets cleared, my next target is the 1.2155. Great, we've reached that, and now this is where we're getting a hold up. So Don't get me wrong. I mean, we had already a decent run, so maybe a bit of a corrective move here to the downside could be possible. However, I'm gonna probably, because it's Friday, probably gonna take a bit of a neutral stand on this one, because again, I would rather. Because it's an unclear situation, yes, it's all positive, but it could correct lower, and we do have NFPs today, and then we might see maybe a drop, a spike lower here initially, maybe, and then a quick reversal back to the upside. So again, it's Friday. Don't mess up your if you had already a good run this week, guys, don't mess up your accounts, and be very careful with this. So probably I will, like I said, I will probably stay away from this a little bit. I rather prefer to watch it and just to see how everything is getting along, and then kind of prepare myself for next week. So EURUSD probably is not going to be the one that I will keep an eye on, but not probably the most tradable for myself. But again, you be the judge, guys, for yourselves. You know better yourselves, and again, as many traders there are so many different opinions. So yeah, guys, you know yourselves better. But like I said, my position here is I will remain a little bit careful with this one today because of the NFPs. So okay, guys, I'll have to wrap it up here. Once again, I'll quick reminder that there won't be any Traders Tea Time later on. So I hope you have a fantastic weekend, guys. Everyone stay safe, both health-wise and market-wise today. And then, yeah, I'll see you on Monday. Thank you very much, and bye-bye.